Well, good morning, everybody. Welcome back to my channel. Took a couple days for me to just relax and decompress, but we're back at it again today with a clear head. So before we start, I would like to say like and subscribe to my channel. We're going to do a whole overall portfolio overview. So as you see, my portfolio is down $1,500 as of yesterday, but do not be of dismay or despair. We have a lot of wonderful things to talk about, a lot of wonderful things to discuss and show the different changes that I've implemented within my portfolio, selling some stocks, buying some stocks, and it's going to be also explanation of to why I did those certain things. So if you are intrigued and if you're interested, like the video, watch the video from beginning all the way to the end, and then also it would help to subscribe to the channel, show your boy some love, and become a channel member. Learn how to invest, learn how to do dividend investing, and most importantly, how to invest to make money in the stock market. So enough with the introductions, right? So as I previewed and showed you and told you guys, I have a couple tabs that we'd like to go over. So as of yesterday, the market has been going down, and I decided to take advantage of the market going down. So as you know, I have multiple portfolios. I have my dividend portfolio, I have my Roth IRA, and I have my rollover IRA, and then also I have my regular 401k as well that I contribute biweekly, roughly 150 to I want to say to $180 every 2 weeks to my Roth. I mean uh, into my 401k, and so right here I lost, as of yesterday, I lost a total of $1,500. Imagine when I was originally doing this video, I was up. Uh, I was up a lot actually. I was up like 76,000. Yeah. So it pains for me to say, but right here, what you'll see is that I'm down in my taxable account. I'm down $700. My Roth IRA, I'm down $300, and my rollover IRA, I'm down over $400. But the reason why it's not as bad as what it looks like is because I actually uh, added some money into my taxable dividend portfolio and my Roth. And so let's show you the activity that I did. And so moving forward, I'm going to show you the activity that I did recently, and then how that impacts my dividend portfolio, my portfolio as a whole, and just my dividend investing strategy going forward. Because as right now, today is February 22nd, 2023. And even though the market has been down these last several days, we can continue to make it. So overall, as you'll see, is that basically on all my accounts, I sold QQQ in my rollover IRA. I bought MPWR, which is Monolithic Power Systems. It's a semiconductor stock. I sold JEPI in my Roth IRA. I sold it. It was about like $960, and also sold Google in my rollover IRA. And I bought more monolithic power systems, and then I also bought Texas Roadhouse, and I also bought here. I bought CDW. I bought $1,247 of CDW, and then right here, going from February 13th on to the 15th, you're going to see a mixture of just me receiving some dividends. I received dividend of $5.66 from Air Products Chemicals. I sold Apple and I bought more like Texas Instruments. And you see right here, I received a dividend from Morgan Stanley, the financial company, of $15.56 that reinvested back into itself. I received a dividend also on February 15th of $26 from Abbey, and then also received like a $2.27 dividend from Accenture. And then uh, I sold Jeppy also in my taxable dividend account. And I know you're like, why you do that? Because the reason why I bought Jeppy is because I was like, I wanted more income for the now, and I got greedy because of the lovely 11% yield. I'm 34 right now. I'll be 35 this year. But the way I saw that, I was like, man, like I don't, I like the income, and I know the market is down, and it helps getting those juicy dividends. But I was like, uh, those those distributions that you receive from Jeppy are not taxed as qualified dividends. So I already have at least four, or at least 4 or 5 like REITs in my dividend portfolio. On top of, I have like one or two, maybe like BDCs, which basically just all in all, just not going into detail what those are, but all in all, those particular stocks contribute to only ordinary income, which means that I will have to pay taxes at my normal income tax bracket. And so having Jeppy in my portfolio, I'll be receiving like huge dividends, but then right now I'll be also be paying a substantial lot more taxes in a taxable account. And I'm like, yeah, I'd rather just focus more on REITs and MLPs and BDCs, and maybe Jeppy in the future when I sell off a growth stock, and then if I want to retire early, do that. Uh, so when I sold Jeppy, the stock that I bought in this place is another semiconductor stock. I don't know what it is, but I've been having a slight crush on semiconductor stocks, because basically with semiconductor stocks, uh, yeah, they're in everything. They're in cars, they're in phones. You just can't, you just can't beat semiconductors. It goes up and down. And also, then yesterday, when I saw that the market was down, I dumped roughly $350 in my Roth IRA, $325 in my dividend account. So I deposited roughly, that is $675 yesterday. And with that $675, I bought uh, I bought $175 worth of WP Carry, which is a REIT. I bought $125 ish of VC property. I bought some monolithic power in my Roth IRA. I bought $110 worth of Lowe's yesterday. I bought $120 worth of Ameriprise, and then as you see, I bought another like $200 or so of ADI, which is another semiconductor. I feel like I've been saying semiconductor, and so let's see how those purchases, how that uh, how that impacted my portfolio. So with those purchases as a whole, as you see, uh, according to my portfolio, I'm still up, but I'm down substantially a lot because the market has been down. As you've seen, I'm down roughly 1,500, and I'm pretty sure the market probably go down again today. So if you got money to buy stocks in either your growth portfolio or your dividend portfolio, this is like the best time for this week to buy, since the market is down and it's in bloody red. Uh, so my annual income as of today from buying the stocks from yesterday is $1,990. Uh, then just focusing on just my dividend portfolio. When you focus on my dividend portfolio, uh, I'm at this point, February 22nd, 2023. I'm making $1,479.39. One of my slight goals is in the next 1 or 2 months is to get this over 1,500. My goal for the year of 2023 is to be making roughly $1,800 by the end of 2023, just with my dividend portfolio alone. And in the previous screen, I showed you that I bought. So I bought like 4 shares of VC property, and it shows right here. It's up to 20 shares now. I bought like 2.1 shares of WP Carry. I'm up to 9.5 shares of WP Carry, and then I bought some ADI. I'm up to 2.101 shares of ADI, and I'm going to show you most importantly the impact it did on my dividend portfolio. Just buying those stocks uh, from yesterday. And so basically those stocks they pay in the month of January, February, March. So they pay January, April, I want to say July and October. So let's just say let's go to April. So basically by me buying those 4 shares of VC property, 2 shares of the P carry, it increased my monthly dividend. Now I'm finally over $100 because I was teetering. Teetering like around $86. Now, as you see, just for my dividend, as you see, I am now over $100 for the month. So that is good in terms of receiving dividends. And then some other things that I did as well. I in my traditional IRA, uh, I made some moves as well. So I sold my Google, I sold Apple, and I sold it's also something else as a tech company. I bought CDW. I bought some more monolithic power. I know you've been seeing this a lot lately in multiple portfolios. This semiconductor stock, it has a low dividend yield, but the dividend growth for the last 5 years has been over 20%. Like you can't beat that. And then also, I I had to buy Texas Roadhouse, and because Texas Roadhouse has been a dividend growing monster, and then also it's been having stock appreciation like no other. So I got in at roughly $99, and I'm just I'm just gonna buy. I bought it. I'm gonna hold, and boom. And then also I bought Centos like a year or two ago, and this is up $119, and yeah, you can't go wrong with Centos and Tractor Supply. If you know, right? And so for those buys, my annual income for my traditional IRA is $286, but that's in a traditional IRA. I won't see this until 26 years down the line when I am 59 and a half, right? And then my Roth IRA, this is the account where the Roth IRA is typically the account where you put money into your into this account, and your money grows tax free. And from what it looks like I didn't update my Roth IRA because I most definitely uh, dropped like $350, and so this right here, how I know it's because uh, the lows, this should have went up, and then this should have went up, and it should have updated. So since it hasn't updated, I will update it for my next video. But overall, just uh, my several my several purchases from yesterday in my dividend portfolio and also in my Roth IRA. I am set to for February. As you see, I pretty much received all of these dividends already. Uh, I received $77 last week from between Avi, uh, Morgan Stanley, APD, EPD, Texas Instruments, and we went over that all of the dividends I showed you, and then lastly, for this week, and it looks like towards the end of this week, I should be receiving my dividend from Starbucks of about $6.62, and most importantly, starting next month, I'm going to be buying roughly $110 of Starbucks per check, which is going to come out to roughly 20 shares of Starbucks. Because, yeah, if you don't know, one of my favorite stocks to invest into is McDonald's and Starbucks, because basically what I've seen is that whether people are broke, whether people are lose their job, recession, I always see people buy McDonald's and I always see people buy Starbucks when I'm at the when I'm on a plane flying somewhere. So overall, hopefully, me showing you my portfolio update. Yes, the market is down. Yes, I'm down 1,500, but I'm still contributing more money. The goal is to be consistent. The goal is to stay invested every 2 weeks or every month. And as you'll see, your portfolio will grow, especially as we've, the Fed begin to continue to fight inflation and interest rates. And once they begin to slow down their interest rates increases, then you'll also be able to see your portfolio be jumping a little bit. But we thought the market that everything was doing fine, everything was going good. But according to certain CPI data, they want to slow down, like slow your horses, and so. But don't lose hope. Just see that, hey, basically you can do it. I'm making money, and basically you can do it as well. And if me, a guy from the projects in Chicago, if I can do it, you can do it too. So stay consistent, start your portfolio, invest per month, and you can get to it. All right. Today is Wednesday, February 22nd. Just so you know, it's live and it's real. Hope you guys have a great day. And I am thinking about making another video. So if you're interested to know another video that I'm about to make, I need for you to look to the right, whatever your side it is, and click this video and learn more about investing. All right, guys.